fundsupermart.com.
What macroeconomic themes do you see happening in Malaysia?
One of the key macro themes this year has been the strength in export recovery. Rising by about 10% in the first quarter this year, export has contributed to the strong GDP of 6.2% in the first quarter this year. Now, the sustained export recovery is going to actually compensate for the moderation in domestic demand, and that in turn will support a GDP growth of about 5 to 5.5% this year. In fact, Malaysia is actually one of the very few countries in ASEAN that's going to see a stronger growth in GDP this year. Now, another theme that is actually worth highlighting this year is probably the rising inflation. Okay, rising inflation coupled with the increased household debt has actually prompted the central bank to announce the first rate hike in 3 years on the 11th of July. That was a 25 basis point hike in interest rate. Now, given interest rates are still at a relatively low levels, and coupled with the fact that the central bank was still relatively hawkish in its latest statement, we don't rule out the possibility of another 25 basis point rate hike before the year ends.
How much further upside is there for investors, and are valuations still appealing?
Speaking of valuations, I must say that the current levels are not particularly compelling. Okay, if you look at the market, the CI, the index itself is actually trading at 17 times this year earnings, falling slightly to 16 times next year. And among all the ASEAN countries, Malaysia is actually the second most expensive market after the Philippines. Okay, if we were to peg the CI at 16.5 times FY15 EPS, then the level should be around 1980 points. Okay, which is about less than 5% upside from the current levels.
What about the earnings outlook?
After the recently concluded first quarter reporting, market earnings has been downgraded to less than 5% by consensus for this year, but it's expected to improve to around 10% next year. The improvement in earnings is going to be quite broad-based, driven by sectors like the banks, okay, telecommunication, consumer, oil and gas, even construction. Yeah.
Where do you see investment opportunities at present?
I think at the index level, although there is relatively little upside given the very high index valuations, but I still continue to see good value proposition at the stock, individual stock levels. Okay, because of that, I think stock picking remains the key for outperformance. Okay, at present, we still like the oil and gas sector, the construction sector, selective consumer sector, the exporters, especially the information, communication and technology, the tech sector, as well as the semicon stocks, and lastly, plantation sector.
What are some of the risks that may materialize?
I think any unexpected slowdown in the US, Europe or China may pose some risk to Asia, including Malaysia. Okay, and also any sudden withdrawal of liquidity from the market could pose a significant risk, because that has been a major supporter of equity prices. Okay, and other than that, any escalation in geopolitical tension, be it in the Middle East, Russia or Ukraine, could actually cause a major sell-off in the market.